Your bank, Frank, does a lot in commercial real estate. So let's talk a bit more about that.
Sure.
Rising cost of capital obviously impacts it. What are you seeing, particularly in the area here in the New York, New Jersey area where you do a lot of your lending?
So this market here and that ConnectOne is in the New York metro market certainly is very different than Denver or Arizona or other places. Much more constrained, supply constrained. There's still a lot of demand. ConnectOne just reported earnings last quarter. We had one of the strongest pipelines ever in our history going into this next quarter. I believe that there's still a lot of room here for additional work to happen. A lot of construction is still underway. The process to get things approved here in the New York market takes forever, and so that backlog still is there. There is also a significant amount of demand for product, whether it be housing, commercial, apartments, and other places. It's just not as frothy and as frenzied as it was 3 months ago or 6 months ago. And higher interest rates are starting to force people to think in a more disciplined way. You're hearing it with first-time home buyers, move-up home buyers, but it's moving into the business and the commercial space where people are looking at the cost of capital and they're saying, okay, I can get a free market rate of return. What is that? It used to be zero. Well, now it's not. And so I think there's a lot of discipline coming back to the market. In my opinion, this was all necessary. We needed some of this. There was a lot of froth in the market in the beginning of the year, and as we know, no market grows to the sky.
So are cap rates coming down dramatically then?
Cap rates are going up. And so
I'm sorry,
values,
excuse me.
Yeah.
Are values coming down dramatically
yes.
and cap rates going up?
Yes, they are. I don't know about dramatically. I think there's definitely, we've passed an inflection point, and for I don't know how many years, quarters, or whatever, interest rates have been doing nothing but going down, and cap rates have been following. Cap rates now, for the first time in a lot of people's memory, or maybe
we're talking
in their
basically
career,
about the yield on
they're
purchase.
starting to go.
What are we looking at
up
right now? Yeah, where are we?
Cap rates are probably in the 6 to 7% range today. New York, there was low as negative or 1 or 2%, not too long ago. New Jersey was in the 4 to 5%. So that's a fairly modest change going up. But there's still a lot of room today for great opportunities in business, and our business owners are seeing that. Let's not forget the backdrop. Businesses have probably the most cash in their balance sheets that they may have ever had. There are a lot of market positives here. The consumer is probably in the best shape they've ever been. Now, you got to wonder, what dollar are they fighting for? Are they going to buy milk and eggs, or are they going to upgrade their home or whatever? So, but when you look around, hotel occupancy rates are at an all-time high. Restaurant, you can't get just an article recently. You can't even get into a restaurant without a reservation today. You can't buy an airline ticket. It's still a strong economy. I'm more in the camp of, I think we are headed towards a softer landing. The Fed has a tough job, though.
Do you think,
slow things down.
Is there still a push to rezone huge portions of commercial for residential, and is that a scenario that other cities are going to have to look at too?
Look, there's a tremendous housing shortage across the country, but clearly here in the New York metro market, it's so hard to get something zoned. The ways that zoning works today just doesn't comport with what we need, what the needs are. Single-family zoning on very large lots in incredibly dense areas just doesn't work. And so I think there's a lot of room here, and I think communities are struggling with trying to figure out what's the right way to do that.
So you had deposits up on your last reported quarter about 10.5%. So give us a broader sense here. You already have, but even more so, of how you feel about the economy, not just in lending for commercial real estate, but more broadly speaking.
Look, overall, again, I think we're in a decent economy. I think it's a disciplined economy. I think people are going to think about what they do next. They have dollars in the bank. Most people are working. Jobs are good. They've got increases. They and their neighbors feel good. I think there's a lot of uncertainty around this midterm election, which is, obviously it'll be over once it's over. And I do think that what's starting to creep into the economy is this idea of, am I going to have my job? There are some layoffs that are being announced. And it's not so much my job, it's my neighbor's job that I'm mostly concerned about. So I think the next 3 to 6 months are going to be telling. Our constituents, our clients seem to be doing well.